In uncertain times, gold is one of the safe haven investments for investors around the world. With the current economy falling, there's no surprise that gold prices have been hitting all-time highs, given that the price have increased close to 30% in 2020. With no end to the economy uncertain on the horizon, you might be wondering if now is the right time to invest in gold. Here, we'll guide you on exactly how you can get started with an investment in gold and other factors to consider. Hi there, welcome to Investors Game. Today, we're gonna talk about, should you invest in gold right now? Don't forget to share this video with family and friends and hit the like button if you haven't done it yet. Now, let's get started. In general, investors looking to invest in gold directly have three choices. They can buy physical gold, they can buy shares of a mutual fund ETF that replicates the gold price, or you can trade futures and options in the commodities market. For an average investor, they might buy gold coins, while other investors implement a strategy using options on gold futures. Experts believe that every investor should have some gold in their portfolio. Gold consumption is primarily driven by need, but seeing how global economy have come to a standstill this year, it's even more imperative to enter this asset class now and add gold to your investment profile. Once you decide to buy gold, your investment will come in one of the following forms. Number 1. Buy physical gold. The value of physical gold is determined almost entirely by the market price of gold at the time of purchase. Gold physical comes in one of the following two forms, bars and coins. These are the best option for owning physical gold. However, there are markups to consider. The money it takes to turn raw gold into a coin is often passed on to the end customer. Also, most coin dealers will add a markup to their prices to compensate them for acting as middlemen. Perhaps, the best option for most investors looking to own physical gold is to buy gold bullion directly from the US Mint, so you know you are dealing with a real dealer. Then, you have to store the gold you bought. That could mean retaining a safe deposit box from a local bank, or you can store it in your home. But selling physical gold can be challenging, since you have to bring your gold to a dealer who may offer you a price that's below of the current price. Next, invest in a gold ETF. They're basically investment in basket of gold-related companies as you would get with a stock. The difference here is that you will not have direct ownership of the underlying stocks. An investment in multiple companies in this manner is certainly more diversified. Next, invest in stocks related to gold. There are many benefits to buy gold stocks instead of physical metal. The main draw is that these companies offer the potential of leverage upside to the price of gold. When prices rise, these companies can increase their gold production and grow their total sales. Unfortunately, not all gold stocks are successful in even matching the price performance of gold, let alone outperforming the precious metal. Because of that, investors need to choose gold stocks that are most likely to succeed. Here are the top 3 gold stocks that you should consider. Number 1. Barrick Gold. Barrick Gold is one of the world's largest gold mining companies. Next, Franco-Nevada, a leading gold-focused royalty and streaming company. And last but not least, SPDR Gold Trust. This is the most famous ETF that holds physical gold. But why these companies deserve attention? First, Barrick Gold has a bold vision of being the world's most valued gold mining company. Driving that mission, it's focused on operating Tier 1 mining assets. Barrick Gold produces more than 500,000 ounces per year, have at least 10 years of producing life remaining, and deliver total cash cost per ounce in the lower half of the industry curve. This focus on operating large mines with a significant remaining resources will enable Barrick Gold to produce a relatively steady pace for years. It expects that its output will average about 5 million ounces of gold per year through 2029. Meanwhile, thanks to its Tier 1 asset low cost, Barrick anticipates that its all-in sustaining cost will decline in the coming years from roughly $1,000 an ounce in 2020 to less than $800 an ounce by 2024. Because of that, its profits and therefore its stock price should rise even if gold prices decline modestly. Barrick complements its top-tier gold mining portfolio with a rock-solid balance sheet. The company has focused on paying down debt over the last several years, which has reduced its interest cost. That's giving it more financial flexibility, which it's using to pay a growing dividend. Also, Berkshire Hathaway bought 21 million shares of Barrick Gold, worth roughly $564 million in the last quarter. So if you want to invest in gold stock, I would really consider Barrick Gold as an option. Next, Franco-Nevada. Franco-Nevada is a streaming and royalty company. It has agreements covering gold, silver, the platinum metal group, oil, and gas. However, the bulk of its revenue comes from gold. Franco-Nevada provided with lots of cash. That gives a financial flexibility to invest in deals and pay a dividend, which has it grow each year since its IPO in 2008. The company also boasts a debt-free balance sheet as of the middle of 2020, a rarity in the mining industry. Another benefit of Franco-Nevada is that it doesn't have exposure to capital and operating cost overruns, which have historically plagued mining companies. However, it still offers the same upside profile as a miner, given its leverage to the price of gold, exploration and expansion upside, and the dividend yield. Because it combines those benefits without the sector negative, Franco-Nevada stock has historically outperformed both gold and the sector mining, making it an ideal gold mining stock. Especially gold streaming stocks offer the highest return potential among gold investment options because in theory, a company's share price should eventually reflect its operational and financial growth. Of course, investing in stocks is risky, and gold stocks are not different. Given this difference, investors need to weigh the rewards against potential risk to choose the right gold stocks for their situation. Next, SPDR Gold Trust is an ETF focused on gold, while several gold ETFs hold shares of gold mining, streaming, and royalty companies. This ETF stands out because it invests directly in the physical metal, which is stores in vaults. Because of that, this ETF does an excellent job matching the performance of the stock of gold bullion. There is some drag on its result, since it charges a 0.4% expense fee. But this ETF is still a great way of investing in physical gold, because it offers similar price performance without some of the drawbacks of owning actual gold, like commission, insurance, and storage cost. It's also a much more liquidity investment because investors can buy or sell in an online brokerage account. Meanwhile, it's less risky than investing in a gold mining stock because those companies can underperform the price of gold amid capital and operating cost overruns, management missteps, and other difficulties. However, for investors seeking an investment that roughly matches gold prices, this ETF is a good option. ETFs are a more convenient and cost-effective way of investing in gold stocks, especially for those who lack the inclination or time to research especially gold companies. A gold ETF offers broad exposure to the sector by holding either shares of gold mining companies or physical gold. Because of that, you don't have to be a stock picking guru to participate in the gold mining industry upside. However, ETFs have drawbacks, including their failure to offer the uncapped upside potential of a gold mining stock. The gold market is in a great position right now, and it has a fantastic opportunity for investing some of your money if you want to see good returns in the long run. And while it's relatively easy to get started and let the critical bits early on, you should also take it slowly and measure your every step in the beginning. If you like this video, don't forget to hit the like button. Let me know in the comment box, would you invest in gold stocks? Subscribe to my channel because every week I'm in YouTube with new content, and do not forget to activate the bell so you don't miss any of our videos. See you next time.